Hi, welcome to Neppy Invest. Today I'm going to talk about a company called Maca Limited. The share price has seen a 50% rise since the start of November. And then the other day, about 3 days ago, they announced an acquisition that I think could be transformational for the company. Now, I'll just say could. It's definitely a possibility. But in this video, I'm going to talk about this acquisition. That's one of the last things I'll talk about. I'm going to talk about the company, what they do, look at their financials, look at their charts, then talk about the acquisition. So let's get stuck into Maca Limited. What do they do? So this is a mining and construction services. So I list what they do on the left there. That's straight from their website. And then interestingly enough, in their website, they do give out some company guidance and they use some broker information for their company guidance. So they've got some broker 1 and broker 2 October 2020 information in regards to revenue, Ebitda and NPAT, net profit after tax, and they've used that as their guidance moving forward. So that's what I'm going to use as their guidance. But in saying that, that guidance is probably null and void now just based off this acquisition. So use that guidance with a bit of grain of salt just based off this acquisition, which I'll talk about in a minute or two. Now, the first thing when I start a research in the company is look at their revenue and operating cash flow. So they do a lot of guidance based off Ebitda. So I'm just put that in here too. But the main thing I really want to concentrate on is an increasing revenue. You definitely see an increasing revenue over the last 10 years with Maca Limited. We just saw a bit of a blip in 2016, but that was an industry-wide blip with the mining services industry. But we're just seeing a continual uptrend in revenue. Probably the one negative thing here, we haven't seen the same upward trend in Ebitda operating cash flow. We'd definitely like to see that. That would be a massive tick in my book. And guidance for this year, based off the broker information of $140 million in Ebitda, is significantly higher than the previous high of Ebitda. And that would flow through to operating cash flow too. So we probably would have seen record Ebitda and operating cash flow numbers if the broker numbers and guidance for the company is to be believed. The next thing I look for is some valuation. So I look at price to book and price to sales. I'm ignoring price to equity just because, in fact, I didn't have PE ratio, not price to equity, but PE ratio the previous year because they were unprofitable because of some write-downs. But anyway, so price to book, price to sales. I don't look for uptrends here. What I look for is some raw numbers, looking at past numbers and how it relates to previous years. And you can definitely see when you look at price to book and price to sales, the one thing I look for with price to book is numbers less than 1, which suggests that the assets they have on hand is greater than the valuation the market is giving to the company. It's a very simplistic way to look at it, but it's the way I look at it, a very simplistic way. So I look for numbers less than 1, which is suggesting the company is cheap. At the moment, with the increasing share price over the last few months to a 50% increase in share price, the price to book ratio is right at 1.04. And the other thing I look for is price to sales, which is looking at the revenue compared to the market cap or the valuation of the company. And traditionally with this company, we've seen the price to sales less than about 0.5, especially the last few years. And that would suggest the company is quite cheap. Also suggests they don't have much margins. And that's definitely, I think, what we're seeing over the last few years. Even though they're increasing revenue, we're not seeing that likewise increase in operating cash flow. We're suggesting those margins have come down over the last few years. So let's talk, before I get to the charts, let's talk about this acquisition. So they've bought out Downer's Mining West business. So this Mining West business from Downer's probably is, if you look at the numbers, it's probably half of the size of Maca Limited. So it's a fairly substantial acquisition. And some of the contracts they do have sort of complementary to what Maca do. So, and also the customers, including Fortescue Metals, are very well known to Maca. So I think this acquisition is going to play very well with what Maca do, and I think it will be very beneficial moving forward. They do mention it's EPS accretive, which I think a lot of acquisitions, a lot of companies, when they mention these acquisitions, do mention it's going to be EPS accretive, and I think that's when you see that sort of thing, you've got to take that with a grain of salt as well. So some of the numbers in regards to this acquisition. So the total cost is $175 million. So initially $109 million at completion, and then 12 monthly installments of 5.5. So total cost $175 million. And when you look at EBITDA, it's 2.5 times EBITDA, which is not expensive at all. And the fact that they're not paying for goodwill and intangibles is a big plus in my book. Work in hand has increased from 2.5 billion to 3.4 billion. So a lot of work in hand. You get to see the Mining West numbers there in the middle. So financial year 20 had $400 million in revenue and EBITDA of 69 million. So when you look at those numbers of Maca, that's about half the size of Maca. So when you combine the two businesses together, you can see the pro forma financial year 20 numbers. Revenue of 1.2 billion, EBITDA of 186 million, and EBIT of 69 million. So how are they funding this? Ideally, I like a company to fund it through cash on hand, but they don't have that cash. So they're funding it by debt, $130 million in debt. So that's something I don't like, raising debt. I prefer, again, a company not to have much debt on hand. And they are doing a capital raising, $75 million in capital raising. So you can look at the pro forma capital structure on the right there. You can see based off, we're seeing the debt raised to 318 million. They'll still have a fair bit of cash on hand between 128 and 203 million. And the ordinary shares will increase to 342 million. And the enterprise value will be between 460 and 530, which is not all that much when you consider the EBITDA is about 186. And more than likely, the operating cash flow will be towards 200 million. So operating cash flow is going to be quite high based off the enterprise value. So I'm liking some of the valuations here. It's still going to be quite cheap. Now we'll get to the charts. Now, this is looking at the 10-year monthly chart. You can just see this is going back to when they listed on the ASX back in 2011 or started 2011. I forget when they listed. But you can see, really, if you've been a long-term holder of Maca, you haven't done very well. So this is not the sort of company in the past where you've just bought and hold for long-term growth. In fact, this range traded between 60 cents and $2.25. So if you bought at the low end of that range, around 60 cents or so, just above 60 cents, say 2015, 2016, or the start of this year during the COVID-19 financial panic, you would have done fairly well out of this company. So if you bought at 2015 at 60 cents and then bought when it got to the top of the range at $2.25, you would have done very well. So at the moment, this is range trading between that range, and maybe this acquisition will change that. Now let's get back to these last 6 months. We've definitely seen the potential of the beginning of an uptrend, which has seen the share price go from 80 cents to $1.20 in the last 2 months. So a significant rise in share price, but it's based off also increasing volume, which is also very bullish. And just based off this acquisition, it looks quite bullish moving forward. So based off this, I'm going to definitely put Maca on my watch list for a future potential buy, especially if we see some weakness in the share price moving towards that uptrend line, which I've got there in brown. So that's all I've got on Maca Limited, a very interesting acquisition, very interesting company moving forward here. I'm definitely going to put onto my watch list and see how they do in the future. Not highly valued at all, but a lot of mining services companies are quite cheap at the moment. If you have any questions, leave it in the comment section. Otherwise, that's all for today. And remember, I'm not a financial advisor. So a few comments lately have mentioned that if people have been following my financial advice, they would have made some losses. But again, I'm not a financial advice. Don't follow my advice. This is just doing these videos for educational, entertainment, and research purposes. And otherwise, if you do need financial advice, make sure you seek out someone who is qualified. Again, I'm not issuing financial advice. So that's all for today. Have a good day. Bye.